Hello everyone, my name is Gregor and welcome to our new update Surfing the Elliott Waves, where I'll look at some of the most important updates for this past week. This video has been brought to you by Orbex. So I will look at the US dollar, Euro, Aussie, cable, S&P 500 and also a quick look at CAD. So as you know, they say if you have the dollar right, you have everything right. So before we go to some of the FX charts, I want to look at the US dollar. Now, firstly, here on a dollar index big picture, looking at oil price activity through 2021, through 2022, and now also at the beginning of the 2023. And what we can see is a very nice recovery here that was reversed quite significantly. We have seen a reversal almost to 100 psychological level where support has been found. I was looking for this to be a potential support, and as inflation worries are back on the table, that's why we are seeing US dollar with US yields trading higher. We also have, as you know, jobs in January beat the expectations by a lot in the US, and you have retail sales still also trading significantly higher. So these are some kind of signals that suggest that inflation is not going to come down just yet. We have seen actually inflation coming out at 6.4%, so still lower than the previous month, but not that much. Okay, so in my opinion, this current inflation thing is going to drive potential US dollar even higher, but from an Elliott wave perspective, I still think this is only a temporary recovery, and that sooner or later this recovery will end, maybe when Fed will really be decided to stop with the hiking rates sometime this year. So these corrections, of course, for a wave B, wave 2, we don't know that. It could be a little bit more complex, but definitely there's the first resistance headed not far away actually right now, 104.50, 105. That's the area that we should look for as a first potential resistance. Now, if you look here, on this dollar map, I have this been tracking this dollar map for a while. Notice that I'm here observing this ABC recovery, okay, on the actual prices. Well, here we have this map, how the zigzag or correction, if you want, is structured. 5 waves for wave A, then you have 3 waves down for wave B, and then another 5 waves up for wave C. So until we see these 5 waves up for wave C in place, that's how long we should be aware of more potential upside here. But that's not the dollar index, it's actually dollar equally weighted to Euro, Pound, Japanese Yen and Aussie. So it gives you a better clarity of what US dollar is doing across the board, not only versus the Euro, let's say, if you're looking at the classic dollar index, because Euro has the most weight in dollar index calculations. Okay, so here we are still tracking this ABC recovery, and looks like that there is room for more upside, but as we go into the next week, that's when we should be careful, especially if we will reach by then this January 2023 high. So definitely a very strong resistance levels, not only from price perspective but also from a time perspective, because that was the starting point of this year. Okay, so for now, yes, we are tracking a recovery, but still can be a corrective recovery. However, this corrective recovery may not end until we see what Fed is really going to do with their rates to fight the inflation after this latest data. Now let's take a look on the euro. ECB also said, just there were some media that reporting that ECB should look for 50 basis points on the next meeting. So we know that. The question is, what will the ECB plans to do actually on upcoming meetings? So that's why we have seen, despite this hawkish ECB, that's why we have seen a very strong reversal here already after the latest ECB decisions. And what we are seeing actually is a very nice and strong sell-off, and looks like that we are now finally coming down lower into this wave C of a free wave drop. So usually we could see a retracement back to the area of a former wave 4. So the first wave 4 of the same degree was here at around 108, but since this level has been broken by an impulsive price action, then we were looking for this to be as a potential resistance. It played out perfectly, and so far I think that wave C is headed to the downside to this wave 4 of 2 lesser degrees. So I think that there is room for more weakness, and that's a ideal support here around 105. Now if suddenly, let's say that market will change its dynamics here ahead of the US holidays on Monday, and then we see some kind of a recovery here and we break 107.25 on the euro, then wave B will be a little bit more complex but still corrective in my opinion. Okay, so I think that this current pullback has more room to correct further, I should say. Now let's take a look on AUSD. Now AUSD is also nicely coming to the downside since we identified this wedge a few weeks back, was broken trend line by an impulsive price action, then we got wave B rally, and now we're falling further. So I think that this correction now can already be trying to unfold this wave C, but there is still room for 630, 670 area potential support. As you can see here in that area, plenty of noise here when you look back at the end of 2022. So I think that this could be quite attractive zone, and I would not be surprised if actually bulls will try to make a kickback here in that area. Okay, now let's take a look on pound. Now pound is coming to the downside despite very strong firstly jobs in the UK. They came higher, so there were some speculations firstly here on Monday, Tuesday, that Bank of England should stay hawkish, because if there are more jobs means more money can be spent, and this obviously has an impact on inflation. But then we got the reports actually that the CPI came slightly to the downside. Okay, still I think it's still above 10%, but reports on Wednesday shows slightly better data compared to previous readings. So that's why we have seen this sell-off, not to mention the US dollar, which obviously impacts all of the majors anyhow. So what we are seeing right now, well, still unfolding this wave 4, could be potential triangle here, could be even wave C of a flat if we see a drop below 1840 level. That was wave A swing support. But overall, I think that that's a contra trend price action just opposed within higher degree uptrend, which in my opinion could resume. Also looking here at this Sterling Trust, it shows potential right shoulder in the making. Here was the left shoulder. Here you have had massive volume here at the bottom. So I think that the next leg again could be to the upside, but of course we could stay in this consolidation for a while. Now looking at the S&P 500, last time when we covered this one, as you know, I've been warning that VIX, known as a fear index, was actually at the lowest levels compared to this, looking at this range from 2022. So when there is no fear, well, actually that's when we should be aware that maybe there will be fear, because market was just too confident regarding the bullish price action. And with this current dollar trend that we are seeing across the board, with more hikes, potential hikes on further upcoming meetings, maybe even faced 50 basis points instead of 25. Well, these are some speculations that is having impact on this current resistance here on the S&P 500. So it will not be easy to broken. I still think that this potential wave B, maybe even flat for wave 2, could unfold. So ideal support in my opinion remains at 3800. Okay, and I will stick with this view even if we pass for a while 4200. The key level would be this 4335. So you have to see a daily close above that level to make sure that wave C or wave 3 is really in play and that this correction is finished. Okay, so if suddenly, let's say that we will see stocks coming to the downside while the US dollar is correcting, I'm quite surprised that stocks are still doing quite well with the recent recovery on US dollar. But with more upside there on US dollar, well, I think that sooner or later this stock market will not be able to ignore the dollar strength. So if stocks would come to the downside, I think that CAD-yen is something that we could watch for, especially because, as you know, yen crosses will tend to follow the stock market. Not always. It depends a lot of from Bank of Japan, obviously, and their data in Japan. So their inflation, obviously, and yield curve control has an impact on those yen crosses. But from a pure technical perspective, I think that this was a very nice extended wave free to the downside, and you're now pulling back from 38.2%. We've been tracking this level for a while, and looks like that can be a potential resistance for this wave 4. So 100 level, very strong psychological figure as well. From there, we could roll over, especially, as I said, if maybe stocks will really see a breakdown. Not happening yet. I'm not saying that it will, but if the stocks will come lower while we are seeing strong US dollar, then this CAD-yen could also potentially see more weakness here. Okay, Taurus, thank you very much for your attention. I hope that you enjoyed this video and talk to you next week. Bye.